Welcome to Bears in Exile. Today is August 29th, and it is time for the market overview. We'll be looking at the Dow, SPX, VIX, XOY, TNA, UUP, FXE, GLD, and SLV. Alrighty. Well, nice big day up for the Dow. And we had, news today. The hurricane wasn't so bad. Consumer spending was up. All that stuff. The most important thing was that we had our two lines for the wedge, and it was broken to the upside today. And more importantly, in my opinion, we had the upper shadow of this candle back here, and it was exceeded today as well. So we're now at a bar retest, and you'll notice that the middle Bollinger Band is now below the short-term moving averages, and of course they are getting their crossover, and it looks like they have enough room for a complete crossover prior to entering the bar, which would put the hurt on the bar and give us a target just shy of 11,800. Beyond that, we have the CCI crossing over into overbought area, which it should be up there for a little while at least, if history means anything. We also have the fast and the slow stochastic clicking up just shy of the overbought area. And the most important thing, the 14-day RSI moving average still clicking up. RSI itself actually getting a small downtick, but the histogram and the MACD continue to rise. So we've been saying that the daily has been looking really good for several videos now, and certainly it is starting to do something really positive. If we go into the 60-minute time frame, we can see that back here we were saying it broke through the bearish bar. We were waiting for a bounce off, which it started on a Friday, and today had its follow through. So this is a textbook guppy entry. Middle Bollinger Band line below the short-term moving averages. Of course, we exceeded the peak back here very slightly, but still we did do it. Beyond that, the daily still looks very strong, but the faster time periods still are not perfect. Downtick on CCI, both those stochastics are very high. RSI moving average once again clicking up towards the overbought. RSI clicking up already in overbought. MACD still going up, but the histogram having a slight tick down at the end of the day. So anyways, do we have any divergences here? CCI, no. Stochastic, no. RSI, potentially, yes. Histogram, yes. So not perfect in the 60-minute time frame, but moving average wise, it does look rather good. SPX, it's going to be more of the same, but we did exceed the shadow by a small amount, which is great. So we've broken this line here, and we've exceeded the candle shadow back here, which we were looking for. And secondaries are all identical to the Dow, so I won't go over that. But this is good. This is good. We should have some slowdown as we reach the bar. Potentially, as the short-term moving averages need to complete their crossover and catch up somewhat. And the VIX, we have a gap down, is a continuation bearish candle. We do have a crossover today, and the middle Bollinger Band line is above the short-term moving averages. Everything clicking down with the exception of the RSI, which got to neutral. How about divergences? Well, the guppy looks really good. Breakdown from the flatline bearish bar. It is getting some separation, and this does look good. There's no uptick or anything to worry about. Beyond that, uptick on CCI. Stochastics are very low. Downtick on the RSI moving average. Downtick on the RSI. Uptick on the histogram. So not as troublesome as the down SPX in the 60-minute time frame, but certainly it looks like it can use some more follow through before we set up some decent divergences. Beyond that, you have a divergence in the histogram and the CCI, but they're rather mild and certainly could develop further before having a decent corrective move. XOY is going to be more of the same, so I won't cover that too much. The short-term moving averages are not as good as the Dow and the SPX, but still not bad at all. Everything clicking up with the exception of the RSI. As long as oil is bullish, the market is bullish. So we do have this peak to contend with right over here. It was 1169. Whether or not it's going to have some problems overcoming that when it gets to it, I don't know. But, you know, maybe that'll be a good moment for a pause when this finally gets here, that the market will allow these short-term moving averages to catch up. TNA finally got a decent move today. We have crossover on the short-term moving averages, Bollinger Band below, middle Bollinger Band below the short-term moving averages. Still have a ways to go before a bar retest occurs, which is about 53, and it is right at the level of the previous peak over here that it needs to overcome, and everything clicking up except for the RSI. Looking for divergences on the 60 minutes. CCI no, RSI no, stochastic no, mild one on the histogram. So that is not too much to read into, and certainly we need more before it's evident that something else is going to happen. UUP, we've been saying that this one is sliding down, and today it continued its slide. Notice further expansion of the short-term moving averages. Middle Bollinger Band still above most of them, all except one. And a mixed bag in the secondaries. Stochastics clicking down, RSI moving average clicking up, CCI clicking down, RSI clicking up, MACD and histogram ticking down. Not very attractive, but I'm going to follow the short-term moving averages and long-term moving averages, and they're saying further down. Certainly we don't have too far to go before we reach this lower peak, and whether it's going to have a reaction at that point is remains to be seen. And the euro. Nice inverse of the dollar. We do have almost a hammery looking formation here. Short-term moving averages going up nicely. We said a couple videos ago that we were interested in seeing if this would break, you know, higher high, lower high, lower high, lower high, and it did get above it today. It did not close above it, but it did get above it. So it'll be nice to see a close above the top of this candle and its shadow. And secondaries are the same, mixed as the dollar, so I won't rehash that. GLD, our second VIX, and it was inside day, real body candle wise, and it's kind of stalling out, trying to figure out what it's doing. Notice that we do have a downtick. It was met intraday, but this doesn't look bad. Some consolidation here certainly would be good for gold. Secondaries are all ticking down, though, with the exception of the fast stochastic. So I would like it to see it consolidate rather than drop and do a complete full bar retest and have crossover on the short-term moving averages. But it's just my preference, and we will see what transpires. SLV, we have a hammer, and it looks very similar to gold. Middle Bollinger Band still below the short-term moving averages. Everything ticking down with the exception of the fast stochastic, and consolidation here would be a very good thing in my opinion, and hopefully that is what it's going to do. I'm still going to give it one more day to finish getting over itself after Binny's talk. Certainly, this big green continuation bar that we had today in the Dow and the SPX seems to indicate that there's a lot of optimism, and whether some of that is QE3 anticipation related is debatable, but certainly seems logical to me. And so I'll give it another day to rest some, and then see what it's doing. But overall, not bad. But I'm going to wait and make sure that it has a real conviction to it before joining in on this rally. So another day. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.